Hello, I'm Bilal, number 165, group 22, and I will be talking about Intel's stock drop of 10.58% after the company reported its third quarter earnings. So here are the main terminologies I found. And the first one is earnings. Earnings are the net income after tax deductions of a company, so basically the profits. And earnings indicate if the business will be profitable in the long run. So it is the main determinant of the share price of a company. The next one is downgrade. Downgrade is the rating of a security changing negatively. The ratings are given to securities by analysts of several institutions, such as investment banks, and a security is downgraded when an analyst feels that the future prospects of the security has weakened. And the third one is annualized basis. Annualized basis in finance is an observed figure over the course of a year or something that happens every year. Moving on. So what happened is Intel published its third quarter earnings report this week, and the shares of Intel dropped by 10.58% after the news came out. As you can see from the graph, the drop was pretty steep, and Intel is an American multinational semiconductor chip manufacturer based in Silicon Valley. So why did it happen? So the fall in the stock price is largely attributed to the fact that Intel barely surpassed the analyst expectations. So as you can see in earnings, it was 1.11 per share versus 1.11 per share expected, and the revenue was 18.33 billion versus 18.25 billion expected. So it wasn't a huge increase. And the data center group, which is the third of Intel's revenue, saw a drop of 7%. Intel's overall revenue also declined by 4% on an annualized basis. And the Bank of America downgraded the stock from neutral to underperform because of the company's uncertain future regarding its next chip and a lack of plan for its manufacturing challenges. So the manufacturing challenges are mostly delays in the chip manufacturing, and Intel has decided to partner with other companies in the future to get rid of these manufacturing challenges, which also may have affected its share price. Moving on, the potential impacts of this events are that the investors will likely take a bearish stance in the short term, and the stock may be abandoned by income funds and dividend investors, which had basically invested into Intel because of its 2.89% dividend yield, but some investors are reconsidering their investment, and there may be a raise in the share price of Intel's competitors such as AMD. For example, when the earnings report of Intel came out and the share price dropped by 10%, AMD's share price rose by 3%. And some investors may take the drop in price to invest long term. So as you can see from the chart on the right, in the long term, Intel has been doing quite well. And some investors may invest to gain profits from the bounce back of price. So as you can see from the chart on the left, every time Intel's stock price drops significantly, there is a bit of a bounce back. So investors might try to take advantage of that. Moving on. So my opinion is that I would recommend investors to stay bearish on Intel in the short term because of Intel's manufacturing challenges and its lack of a plan for the next chip. I would suggest investors to invest in Intel's competitors such as AMD for risk mitigation and higher returns. I would suggest investors to invest in Intel for the bounce back in the short term, but I believe it will be very risky. So I would suggest them to stay bearish in the short term, but if they want, they could invest for the bounce back gain. As we saw in the chart in the previous slide, there is precedence of Intel bouncing back in the short term after a big drop. And in the end, I would advise investors to invest in Intel for the long term, because as we have seen in the chart in the previous slide, Intel has done well in the long term, so around 10 to 15 years. So I would advise investors to spend money on Intel's share price for the long term and also for its dividend. Here are my references. Thank you very much.